This divergence after the crisis years where everything moved in tandem. We see this US exceptionalism extremely strong. This is based on the US consumer, 2/3, 70% of the economy actually driven by a very, very wealthy consumer. I think, therefore, the last thing this economy, the US economy needs is further stimulus. I think that's why the concerns come up, will this spur further inflation? And then on the other hand, and the exact flip side, China in deflation, Eurozone probably entering deflation soon, or disinflation in a major way. So I think, their policymakers are really under much pressure to do something as opposed to the US. So we have this, and on top, of course, the whole tariff debate and everything. So I think there's a lot of things to be discussed and looked at during this year when it comes to inflation. There might be a healthy correction to really shake out the weak hands. And this might be sometime in the first half or maybe even the first quarter of this year.
The macro is very much focused on geopolitics and, of course, the White House with Trump now. This whole America First mantra, we see that, and the way we play that in particular is looking at some equity strategies. And these are companies in particular that benefit exactly from securing access to some key areas, like supply chains, for example. The reshoring of the manufacturing capacity is hugely important, so companies will benefit from that. Resource security as well, think about oil and gas, national security. So all of these combined, companies will, in fact, be quite profitable in benefiting from many of these underlying investments.
In our market outlook, Christian, we prefer corporate bonds over sovereign bonds. Can you explain?
No longer unlimited bond buying, sovereign bond buying by central banks. They normalize policies, and I think this is also a real supply issue. And then, of course, we have the fiscal side of things, both in the US and Europe, where investors actually will sniff around whether there's anything that doesn't really smell that good. And therefore, I think if you take the corporate end, I mean, in terms of relative, it's hard for them, of course, to be better rated than their respective sovereign. By definition, that's almost not possible. But if you look at their financials, it's way, way more healthy than anything you can find in the sovereign space.